Sunday morning. Good morning to the SMF Treat staff. Good morning to all of our foreigners that are with SMF and looking at our daily charts and our daily program. They all qualify to be on SMF Street. You do not have to be a U.S. citizen to qualify. And basically what we're looking at here is we got a $1,950 call on the NASDAQ 100. And what is the NASDAQ 100? It is 100 stocks right here. It's 100 stocks. All of these stocks that you see in here, Apple, Google, Amazon, lots of different stocks. That's the index. That's what's and that's what this is based on, is that all of these make a price movement that make indexes go higher and lower. And just remember, people, we're going into the earnings season. And we are masters at earnings, as you all are aware of. Basically, 1950 call. We have the 1950 put. We got the call chart and put chart. We're also going to deal with the option chain in here. This is on NASDAQ 100. It tells you right here, NASDAQ 100, and this is the call side of the indexes, and this side here is the put side of these indexes. So if the NASDAQ 100 falls in price, then this side of the market gets value. When the NASDAQ 100 is breaking out to the upside and you have calls, they get value on your options on the index. And it's a way to trade 100 stocks, long and short, right along with bull and bear ETFs related to various different things that we do here. We know how the index is weighted, so let me pull off that there. So the open interest that we're really keying in on, we've already talked about it up, in our private group. So basically, I am going to move, this is the call, bid and ask level 2. They closed at 44.40, okay? I want that made right there. I want people to understand that. So the high was 46.50. I want you to know that. With the previous day's close, the close now is 44.40, but we were 44.10. We didn't move much on the 1950 call for Friday expiration. Triple witch, actually. So I'm going to move that over there for us. Then I'm going to let you know right here at the same strike price, it's a $1,950 put option. And this is that chart. And this is way down in value, and we're going to get into it, but here's what I want. The closing price was 38.7. That's what you're going to open up to tomorrow. The other thing I want to be advised was that swing low of the day of 36.58. Wow. But guess what the high was? 42.90. It's that 42.90 that made that high in on that intraday action. And since we've had 10 full bull trend trading days up to the highs, is that the individual markets themselves have had a very good run. And they've had a counter trend to the August selling. The move in the indexes themselves in the beginning 2 weeks of September is the first time it's done that in 6 decades. And that's where the short interest was being bought. That's how we got this rally. Moving forward on Monday, which is going to be 9/20, going into the back half of September, we're going to find out what these markets are made of. And that's exactly what we're going to do. Now I'm going to move this over and out of the way. The other thing we're going to take a look at is the open interest here in this table. So let's get that. I can't get the whole thing in the video. Okay, here it is. So this is the open interest for the October contracts. On the put side, it's a very minority one. There's only 136 contracts. But on the call side right here, that's where all the bulls are in, and that's the perfect time to start looking at taking the other side of this trade. We'll let the platform and the weekly charts guide us, and the daily chart movements. We'll let our system tell us, but you just need to know the minority difference. Okay? And now when we go and take a look at the 1900 put, which we're looking at carefully, we got 5,300 to the put side, but notice that below the market, now remember the NASDAQ 100 closed at 1955. So this is 55 handles below to this strike price on call and put side. basically got 5,123 contracts open here now. So there's a balance ratio in there. But when you start taking a look below the floor, you can see that the bear is very minority at 136, and everyone's getting involved up here at the high of the markets. And SMF Street traders know when to take the other side of that public, and when that top end of that, wherever we end up going in our index platforms, we have already showed that on the other video, so you have that in your folder. When we go up, mathematically we go up. The more we go up, we're going to get saturated up there at that top end. More people are going to get crowded in here. They already own it. There were very few people who did. The old saying is, hey, when trends finally make their peak, they make their peak. And then when they make a peak, there's always a reversal. So basically, what we're going to look at here in the video is this is a 1950 put. Once again, it's at a deflated price. There's always a market below here in our platform, and we know where that is, MMTs, and we'll discuss the pricing on where we're going to put these bids. But more importantly, let's take a look at the put on the week of this last week right here. I want you guys to know that right here, that 1950 put right there, that high of this last week was 62.95, and they took 100% out almost. 36.58 was the low. That's deflated. On the other hand, I want to give you the reading over here. Let's take a look at this one. Let's take a look at the high of this contract. This is that $1,950 call, and we're only $5 in the money, but we're getting top end heavy. We can go up and get more inflated. Like I said, when you're in this kind of tape, you can get a little bit more inflated. Each time you get a little bit more inflated, the bigger and the more profitable trade that you are going to make, SMF MMT. You've done hundreds of them already. Once again, we're going to get ready to rumble when we finally get totally imbalanced on one side. Imbalance means imbalanced. You're going to get too oversold here, and you're going to get too overbought here. And as a market maker at SMF Street, you're a market maker. And the calls reach a peak, and the puts, on the other hand, they reach their downward peak right here, because they do. And then one comes down and one goes up. And hey, here is what it looks like. These were at one time $50 over here. Let's not be fooled. 50.53 was a high. We still have some room to go higher. But we're getting inflated in a 3-week zone here. And when we can get more inflated, the more inflated it gets, the more money we make. And we'll take a look at other various strike prices as well. So basically, as we go through this trade, I'm going to give you the pricing structure now offline, so that when Monday comes, you got all the price values, the lower market here, the higher market here, and we'll get ready to put these trades on, meaning we're going to get long one and short the other. We'll also be taking a look at the bear and bull funds as well. That's the call and put charts. I can just show you a monthly chart. Once again, we use our own charting platform, but we'll do this so that people can see what the public looks at this. This is a bullish trend above the 10-month moving average, there's no doubt. And you're slightly above half of that monthly bar, and that's bullish as well. So basically, that's all that means in standard technical analysis, which our platform that we showed you is not a standard technical analysis platform. It is a pure mathematical platform. It does all of the calculations as far as a strong trend, a weak trend. This is what the MMTs use. They don't use what I just showed you in the other chart. And everything that they're trained about momentum is all in this info panel. It's all in this black box. It's all in the pricing structure here in the middle. It's all done. This is very foreign to you people. This is not a retail public platform, and nor is it sold to the public. It's used for the SMF Street trading